Morning, Steve here in Chicago with the morning grain comments. Well, we've got a lot to kind of talk about here, but don't know if it's going to have a big impact on prices. As far as the weather is concerned, it looks like over the next week or so there will not be a lot of rain forecasted for the Midwest. Temperatures, though, will be probably at normal, maybe a little bit below normal, so we don't know how much stress the crop's going to be under. But there is talk that maybe as much as 32 million corn acres and 28 million bean acres is in this circle where rains are needed to help crop conditions. And that area is parts of Iowa, South Dakota, North Dakota, and Nebraska. We also note that the International Grain Council yesterday cut its global corn crop about 5 million tons. It's still a big crop, but they reduced crops in the U.S. and Europe, but did increase the Brazil crop. They also lowered the soybean crop down about 3 million metric tons, but it's still the second largest crop ever. And then as far as the wheat, they also lowered the wheat crop by 3 million tons. It's still a big crop. And again, reductions in the U.S., Australia, and EU were partially offset by increases in Russia. We also had the results of the annual spring wheat tour, in which they came out with a yield around 38 bushels versus the government's 40. I think some people were looking for something much lower than that. And I think it works out to about maybe a 399 million bushel total spring wheat crop in North Dakota. The government was at 443 in their last estimate. But there are some estimates as low as 300 to 315 million bushels. So we still have to see harvest results to see what number is correct. So before the week, wheat prices are down roughly 13 to 17 cents in winter wheats, down 25 in spring. Corn prices are down somewhere around 6 cents. Soybean prices are down 16 cents. And it seems like the funds, at least the managed funds, exhaled a little bit. And looking at this 2-week cool forecast instead of a hot forecast, they decided to get out of some of their positions. Yesterday, though, managed funds as a group were net buyers of futures, and we still have them long 40,000 beans, 100,000 corn, and 22,000 wheat. Yesterday I was in South Dakota, and I visited with a lot of farmers. They were at the Hefty Seed field day, and the number one question that they had was what do they do with the corn they still have unsold from last year's crop. And this is a very difficult question to answer because prices are below break even. We're hearing, especially in the eastern Midwest, farmers may carry this corn in through harvest and wait for maybe a rally next year. Seasonally, whether it's corn or soybeans, we have a tendency without a weather problem to drift lower from here into the harvest lows. And then we try to manage some type of rally into January, and much of that has to do with the farmers not selling here, plus the unknown of the South American weather situation. If there's no problems in South America, we make new February lows. And then once we've established that low price, we start building up a premium into the following year's crop conditions. So if we're in a trading range, and once we establish that trading range, there'll be some base hits between that range, but no really home runs. Again, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe, profitable trading day.